Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Steven Ehrlich, Director of Research with Digital Assets over at Forbes Crypto for our monthly segment on trends and what we're seeing in the digital asset space. Steven, it's great to see you as always. Welcome back to Trade Talks.
Yeah, thanks, Jill. Pleasure to be here.
All right, you got it. And it's been a number of days since the record October inflation numbers have come out. How is the market responding, and are there any cryptos that are bucking the trend?
Yeah, so it definitely spooked the market a little bit. I mean, we keep hearing that inflation is transitory. It's transitory, but each time that we see the monthly year-on-year numbers go up, and 6.2% was the highest recorded jump in 31 years, it definitely scares people. And as much as Bitcoin would seem to be positioned to benefit from inflation, the reason it scared people is because it might suggest that the Fed is going to tighten the screws on the economy sooner rather than later. In fact, a number of Wall Street banks like Morgan Stanley and Goldman Sachs have accelerated the timeline for which the Fed is going to raise rates from 2023 into the middle of next year. And Bitcoin is really still trades as a risk-on asset, sort of more like a high multiple growth stock. So if interest rates are going to go up, that's going to make safer investments like bonds and other fixed income products a bit more competitive. So people are going to roll out of Bitcoin, and we saw that. Bitcoin had gotten close to about 69,000 a couple of weeks ago with kind of all the euphoria around the Bitcoin ETF launches and so on and so forth. And then when this happened and when these numbers came out on November 10th, we saw it decline. It fell below 60,000. I believe right now it's around 57,000, and it brought Ethereum or Ether down along with it. I think it's threatening 4,000 right now. And since a lot of the market is highly correlated, it's bringing down a lot of other assets. That said, as you mentioned, there are a few sort of standouts that are bucking the trend. One category that's doing especially well are sort of the Metaverse tokens, the Decentraland, Sandboxes, Axie Infinities, because that's a very hot button issue ever since Facebook announced its rebrand in late October. Zcash, which is sort of a fork or derivative of Bitcoin that has some additional privacy enhancements, is up about 30% in the last couple of days because it announced its developers announced a roadmap to transition from proof of work to proof of stake, which is sort of seen as like the going to be the dominant way of achieving consensus on blockchains moving forward. And then Avalanche, which is sort of an Ethereum competitor, has also been surging largely, I think, due to one, a 9-figure incentive program to sort of bootstrap liquidity for decentralized finance programs, as well as a recently announced partnership with Deloitte, which adds additional credibility to the project.
Right. It kind of makes sense to see the DeFi altcoins moving in a different direction than Bitcoin. If the story with Bitcoin is along the lines of a way to combat inflation, which I think we kind of would have moved beyond that narrative at this point when we look at all the different types of use cases that are out there. So it's interesting to see how these are going to start to trade as monetary policy starts to shift. But let's go back to what you were talking about, product and ETFs. VanEck just became the third Bitcoin futures ETF to launch. How is it performing, and what else should we expect on the product side?
Right. So VanEck, it actually had gotten approval from the SEC to launch a couple of weeks ago, but it delayed, and its launch really was kind of met with a thud in the marketplace. I think right now it has about $11 million in AUM. That's compared to ProShares, which when it debuted in the middle of October, reached $1 billion in trading volume on the first day. Right now it has about $1.3 billion in AUM. And the second Bitcoin futures ETF that launched a few days after ProShares, Valkyrie, I think right now has about $46 million in AUM, which is about 1/20th of, or more than 1/20th of what ProShares is, and VanEck is much farther away. And I think this shows us a couple of things. One, there are some nuances in how these products are structured, running up against position limits and fears of contango that make them in some ways a little bit of a less efficient product than what would be a spot ETF or owning Bitcoin directly. But I think it also shows that markets might be running, we might be running a little bit out of steam for some of these products. And I think Invesco actually canceled its plans to launch a futures ETF, and I think we're really waiting to see what will happen if and when a spot ETF will get approved. The SEC has recently rejected a spot ETF application from VanEck, actually, so it's been a tough couple of weeks for them. But I do think that if and when a spot ETF gets approved, it will bring in a lot more flows.
No, I think it's what the market is saying, right? It's exactly what it's saying. Let's talk about Biden and his nomination for Powell for another term of Fed chair. How did the crypto markets respond, and what do you think this could potentially mean moving forward?
Yeah, so this actually had started to create some agita in the marketplace because we didn't know whether or not Biden would approve or renominate Powell for another term. Dr. Brainerd was seen as a possible successor. That said, I'm not particularly surprised. It is common for Fed chairs to get more than one term, even if they were appointed by a predecessor from a different party, as Powell was by Trump. And we can kind of look pretty closely at recent history to see this. When President Obama nominated or renominated Ben Bernanke, which was in the throes of the financial crisis, and right now we're in another financial crisis driven by COVID, and though we're starting to work our way out of it, I think for a consistency point of view, it was important to renominate Powell. I think the markets reacted to it relatively well. He is seen as a bit more dovish and wants to let inflation play out to see what happens before really tightening the screws. That said, he's not seen as a major crypto advocate, and most of his commentary has really focused on perhaps the digital dollar and whether or not the Fed is going to try to incorporate or create one sometime soon. So I think relatively muted, but overall, I think it's just good from a credibility standpoint for the Fed.
And how should investors approach the metaverse? You touched on that earlier.
Yeah, so this is really important. It's gotten so buzzy right now that it kind of brings me back to when a few years ago, every company put the word blockchain in their name, and all of a sudden their search terms would go up, their stock price would go up. And then at the turn of the century with the .com bubble, where everyone just put .com at the end, and no one really quite knew what it meant and really didn't look much past the name when analyzing a business. And the metaverse, it seems like it's going to be the next big thing. So it's really important for investors to sort of figure out what it means for them. Does the metaverse mean blockchain? Does it not? Because that's not necessarily an easily answered question. And if you're looking to invest in the space, also break down the metaverse into different components, such as NFTs and virtual reality and other types of technologies, GPUs, semiconductor chips that are going to be necessary for all this to function. Morgan Stanley issued a report a couple of weeks ago about how the metaverse is sort of the new big idea that they have, and they're broken it down to these different components. And I think those are the levels that really sophisticated investors need to look at in order to create a strategy to benefit from it that is solid.
Right, and let's wrap up with the impact of the ConstitutionDAO, Decentralized Autonomous Organization. So a couple questions here, Stephen. Is this like the digital version of LLC, where you kind of protect the buyers, and then because of the way it drove up the price, what could the impact be moving forward? They didn't ultimately get the bid.
Yeah, I mean, the ConstitutionDAO, that was a big story last week when one of the original, I guess, first printings of the U.S. Constitution, I think it was one of two that are privately owned of the 13 that were created, went up for auction. It ended up going for $43 million to the hedge fund billionaire Ken Griffin, and the DAO actually itself raised a little over $40 million in just over a week. So a lot of money, but ultimately they were unsuccessful. I know a lot of people in the community were still excited about it. They were encouraged by the number of people that came into the space, and many bought Ethereum for the first time so that they could participate in the DAO. And I know people sort of felt a bit of a bond to such a historical document. I am really curious what would have happened if they had won, because then they would have had to figure out collectively where it would go, who would safeguard it, so on and so forth. And in some ways, I'm actually a little bit relieved that they did not win, because I'd rather have some of those things figured out with something of less historical significance, even if that's the reason it got so much attention in the first place. But since then, there's been a lot of other DAOs that have popped up. One's trying to buy, I think, a Major League Baseball team. So we'll see. But I do think that the Pandora's box is out, so to speak, when it comes to these DAOs. And as they grow and as they become more sort of entrenched in our life, we're going to have to figure out what it means from a regulatory point of view, from a taxation point of view, from a investor protection point of view. So this is definitely a trend worth following.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great, thanks, Jill.